Hello everyone, my name is Peter and let's talk about some currency pairs in today's technical analysis video. Let's start with the euro-dollar pair. As you can see from the chart, the long-term uptrend remains intact as the pair has been posting higher highs and higher lows, which is really evident from this long-term chart. However, the short-term perspective is not that bullish anymore as bears have returned to the market and pushed the price of the euro-dollar lower, which is very well seen in the short-term downtrend channel. As long as the euro trades within this channel, the short-term trend could still be bearish. But on the other hand, this support here near the previous lows of 1.05 should offer enough buying power to push the pair back into its upward trajectory. Moreover, there was a very nice negative or bearish divergence between the price of the euro dollar and between the RSI indicator, which has stopped bulls in track and led to a decline from this level near 1.10, which also served as a psychological resistance. Therefore, for the next days, I expect the price to move within this small downtrend channel, and the price could really retest the support already mentioned at 1.05. And as long as the euro dollar defends this support and trades above it, the medium-term bullish outlook should remain intact. Therefore, bulls could take a break for a while and expect the price to decline further before initiating new long positions. In case this support is broken, the next support could be here at the 200 moving average around 1.03. Let's move on to the next currency pair, which is the British pound against the US dollar. So for sterling, the situation remains kinda the same. However, there is a clear double top formation here near 1.25, which is the key resistance heading into the second quarter. On the downside, we are seeing some serious supports here near 1.1850 or 60, which is also the support of this double top formation, or also called the neckline. Moreover, there is this 200 daily moving average near 1.1930, and as long as the pair stays within this confined space and above these two supports, the medium-term outlook still favors going long. Therefore, sterling should strengthen over the next days. However, if these two supports are taken out and the US dollar starts strengthening notably, we might see a decline towards this region near 1.15, as this really could be played out as a double top formation. But for this formation to become valid, the price needs to break below this neckline or this support of this formation at 1.1860. So for the next days, basically the tactic or the strategy for this currency pair could be to wait it out whether we see a break above this resistance near 1.22, which could push the pair to 1.25 again, or on the other hand, if the pair drops below this neckline, we might see further decline targeting 1.15. The next currency pair we have here is the dollar yen. The situation here is kind of a bit more different because there has been a clear uptrend starting in the middle of January. Currently the pair is trading near the higher line of this uptrend, which usually means that momentum could start slowing down, and usually or normally a price correction appears, pushing the price to the middle line of this uptrend or possibly to the lower line of this uptrend. But for now, the sentiment still remains bullish for this pair, basically supported by the recent repricing of the Fed's federal funds terminal rate. Investors now expect the federal funds rate to stay near 5.5% for the rest of the year, as rate cuts for the second half of this year has been priced out. As the dollar yen is one of the most sensitive pairs to the US yields, if US yields continue to move higher towards their cycle highs, it could also benefit this pair, possibly targeting the 200 daily moving average near 137. On the other hand, if we see a deterioration of the market sentiment, then the dollar yen could decline to the support of previous lows near 131. However, as long as the pair remains in this short-term uptrend and above this support of the red horizontal line, once again the outlook seems kinda bullish. And the final pair we have here is the Australian dollar. The situation is much more clear for the Australian dollar as the currency pair has stopped at this critical resistance near 0.713, and it has also formed a massive double top pattern. And furthermore, we are seeing some weakness also today, as the pair is trying to decline below the 200 moving average, and also it has already dropped below this, I would say, a medium term or long term uptrend. So basically the recent uptrend in the Australian dollar might be over pretty soon, and if the Australian dollar closes below the 200 daily moving average, it could lead to further losses, targeting this zone, this consolidation zone around 0.67. So the outlook for the Australian dollar for the next days is pretty bearish. I think that we will see further declines here to 0.67, as already mentioned. On the other hand, if sentiment improves here, the pair needs to rise back above this long-term trend line. So the resistance is currently near 0.6850, and if this is achieved by bulls, then we can really see another relief rally targeting the psychological level of 0.70. So for now, I think that the Australian dollar will continue to decline over the next days. That's it for today's video. I hope you liked it, and you can also subscribe to our YouTube channel or other social medias to see more content like this. Thank you and have a nice day. Bye bye.